After somebody dies, one of the obligations of the family, typically the executor, or if somebody dies without a will, that person is called the administrator. And if they die with a living trust that has all the assets in the trust, they're called the trustee. That person is responsible for filing an estate tax return if that's necessary. They're certainly responsible for filing an income tax return for the deceased for the year of death. And then potentially for the estate for the months following death before the property is distributed to the heirs. So the year that the deceased died, typically, I guess unless you died about midnight or 12:01 on January 1st, you're going to have income. And the IRS wants to know how much income the deceased made during that year, and they want to be paid the income taxes on that money that year. That's why the deceased estate has to file the income tax return. After that, the kind of return that's filed goes from something called a 1040, it goes to something called a 1041. This is the return that estates use and trusts use after somebody's passed away to let the IRS know how much income is being earned on the assets of the deceased.